So, as of this morning, the Strait of Hormuz is still closed. Iran is no longer in peace deal talks with the United States because the United States over the weekend had an attack on Iran. Iran citing it's a ceasefire violation. The United States claiming that it's a self-defense issue and they were basically a defense attack, right? Long story, period, point blank. We're no longer in conversations with a peace deal in Iran. We were apparently this close, and however, now that gap has opened back up. This just means that expect over the next few weeks, you're probably going to see barrels of oil going above $100 a barrel again. You're more than likely going to see the 10-year bond start to go up once again, closer to that 4.7 up to the 5.0 range for percentage, meaning that's the yield that you would get for owning those bonds over a 10-year period. When stuff like this happens, the 10-year Treasury bonds or bonds in general just become less attractive, which means that less attractive means higher yields to create the more attractiveness, right? We're going to see those go up, but in turn, the reason I see the 10-year Treasury bond, it directly correlates to the mortgage rate, which means we're more than likely going to see mortgage rates go up again. Now, at the federal level, they are not talking about raising interest rates at the next Fed meeting, but until Kevin Warsh gets in front of the cameras on his first Fed meeting as Fed president, we don't typically know exactly what to expect. The market has been sitting pretty neutral for the last couple of weeks. However, with news like this, expect volatility. Not just in oil, not just in bonds, not just in mortgages, but in anything energy related. More than likely, we're going to see spikes in the silver and gold market over the next couple of weeks again, especially if we were this close to a peace deal and now we're going to the other side of the spectrum, or the pendulum swinging the opposite way. So here's what I'm expecting to happen. I'm expecting mortgage rates to stay between the 6.5% to 7% interest rate, a little bit higher than my initial anticipation was 6 to 6.5%. And we're going to see extreme volatility moving into the next couple of weeks. I like how this comes out. It's starting to be very pattern based. Either right on Friday we get something, or right on Monday. Right on Friday or right on Monday. It seems over the weekend is when these moves happen. So expect this week to see a little volatility today, neutralize out or level out through the week, and then moving into the weekend, probably more volatility coming into the next week. If you like what you're hearing, make sure to like and follow. And if you want a full breakdown, we did it on YouTube this morning. Be sure to check it out.